Hi, my name is Bryan. Welcome to my channel. Today we're talking about some opportunities in the post-launch market and what are the interesting things to look out for, especially buying into post-launches. So if you like my content so far, please feel free to follow, subscribe, and share. And if you have any real estate matters that you wish to consult me for, please contact me at 9199-9966. The interesting thing again where we talk about in 2026 is the amount of launches that's happening in 2026. There is many launches that's happening. There's up to even 20 plus 30 launches that will happen in the year 2026. As you can see from my screen, you can see the potential launches that will come up in the year 2026 itself all over the island. All right, so the supply of new launches coming into the market this year will be substantial, and the prices will be slightly different from year 2025 or even 2024 for that matter. So in this market, when there is so many different launches to look at, where should we go? And what are the opportunities that we should be spotting or should be identifying when we make our purchase? All right. So before I even begin talking about what to look at, what are the opportunities to look out for, we need to understand that there is a base foundation to our real estate prices in Singapore. And if you ask me what can be our foundation in our prices, is actually our executive condominium. So if we look into the EC of Singapore, the foundation of Singapore's real estate prices, the current EC that is available in the market, I think the most recent launch that happened was AutoPlace in Tengah. So for AutoPlace itself, if you can follow me on my screen, you'll notice that their per square foot per plot ratio is at $701 PSF PPR. Now the estimated break even was at 1289 per square foot, and their eventual average selling price was 1757. Which means that 1757, there are units transacted even as high as 1900 plus per square foot for an EC. Now, if you look at the ECs that are coming up in the market, assuming I use the Woodlands Drive 17 by CDL, 420 units, 782 PSF per plot ratio, 1399 per square foot. This is their break-even price. So their break-even price is about $100 more than AutoPlace. Now, if we look into their average price for AutoPlace at 1757, how much must Woodlands Drive 17 be selling for? All right, assuming 1399 is about $100 per square foot difference, the average selling price for Woodlands Drive will then be $1,850 per square foot for their average prices, which then means that today for Woodlands, we might even see a breakthrough in terms of per square foot beyond $2,000 per square foot. And mind you guys, this is an executive condominium, this is an EC, so this is a government subsidized condominium. All right, and this is the price point that they're going to come in for. So if you notice that today, the lease that is coming up, Revel, has a higher break-even price at $1,503 per square foot, which is interesting because Revel will be previewing soon in March. So we are definitely looking at the prices of Revel and what are the prices that they are going to do. And that sets that new benchmark for the ECs in the market. And that sets the foundation of our prices for the rest of the private properties in the market as well. So once we understand this and we look into the next one, the future of Singapore's real estate prices will then be the future land plots that we talked about earlier on. With the many launches coming in, let's zoom down into maybe a certain area here. All right, so if you look into the northeast north region, we are looking into Chuan Grove and even the two plots of Tran Grove. They have managed to combine the two plots together. One plot being 2327, the other plot being 2266 per square foot, their break even. The average selling price should be targeted for about $2,500 to $2,600 per square foot, and that's for Chuan area itself. Now, many eyes are on Thomson View Condo. Their break even is 2058. All right, they have the flexibility to be selling from on average maybe $2,400 to $2,500 per square foot, or even slightly lesser, depending on how much profit margin the developer wants to make. But for Thomson View, I would say that is one of the most sought after area this year. I think the selling price could start from about $2,300 per square foot, $2,400 per square foot for Thomson View. So this is that future land prices already for our pipeline in future. Now, why do I say that? If we want to understand or we want to find what are the opportunities in the current market, do we look at the current launches that is going to come up, or do we go back and look at the post launches that has balanced unit that we can consider? So understanding the foundation, understanding the future of our Singapore's real estate prices, then we can start to understand where are the opportunities, right? So if I were to use this as an example, this is the opportunities in Singapore's real estate. If I study this, this is the new EC prices in red. And of course, I use the OCR price point as a reference for opportunities. So my red line being here, this is my EC prices, my blue line being the private prices. So if you notice one thing, when we talk about how our EC prices lay the foundation, we start to see a very narrowing gap between the EC and the private property, which then means that today, if the EC for Revel, for example, sells as high as $1,000, $8,000, $2,000 per square foot, if I'm able to come into any OCR properties ranging from $2,000, $2,200, even up to $2,300 per square foot, my gap between EC and condo is now $200 to $300 per square foot price difference. Do you think that today there are opportunities that we can enter in at this kind of price tag? All right. Actually, back then, right, when we see prices between ECs and private property, the gap can be as high as a $700 to $800 per square foot gap. And this itself would then mean that today the opportunity for me to buy into a private that has more traction, lesser restriction, and lesser holding period for me to then actually exit from that property. This is actually the opportunity for us to enter into this kind of post launches at this kind of price point as well. Okay. So why is this reset happening? And basically, what should we be looking out for? When this happened back then in 2022, 2023, this was a very subtle, to me, I always felt like it was a very subtle way of the government trying to control the market, right? So when they did harmonization back then, when they do alignment towards how they look at the square footage of the unit, they are no longer taking into consideration aircon ledgers. So for those of you who do not know, harmonization actually happened. The announcement of harmonization happened in 2022, 2023. Therefore, the land prices started to drop during that period of time. And why is that this drop? The developers are a little bit more careful towards what they want to bid for and how do they want to price their unit, because they do not know whether the consumers can potentially accept a smaller size. Of course, a smaller size doesn't mean that it's not efficient. A smaller size actually means the removal of the calculation of the aircon ledgers. And this means that this is cost safe on the consumer's end. And what actually happened, if you notice the price has dropped during this period of time. So in terms of per square foot, the price has corrected or dropped slightly because today the developers have bidded the land for much lesser cost. And therefore, they are able to then maneuver around, create some flexibility and create interest, which actually caused quite a bit of stir in the market, because back then when harmonization happened, the price actually corrected itself and some of them sold lower than the launches that happened in 2023 or early 2024. So when that happens, right, 2024, 2025 saw a very, very interesting year with many projects hitting 80%, 90% sale. And some projects even do 100% sale within just the year alone. All right. So when that happens, right, basically now this gives the developer more what? They give the developer more confidence to sell their product. Therefore, in 2025 last year, one thing happened. The land bid prices actually increased. So this caused the land bid prices to increase, causing then the price point to also increase in terms of normalizing the per square foot. So in 2026, we will start to see per square foot coming back to what the 2022, 2023 has done. So in terms of the average prices throughout the entire Singapore, we will start to see the prices coming back to that of 2022 and 2023. So what we want to find is that window, a very small window right now in the post-launch segment that you can enter into a price point here. If you can enter into this price point right now, this is that window of opportunity, and this is your time to go into the market to make sure that you are buying back into a historical price rather than a future price. Okay? And the last graph I do want to show you is the relationship between the resale properties in Singapore, the new launches in the market, and most importantly, the subsale, that is the determination of the profitability of the new launch that you bought 4 to 5 years ago. Now, if you look at the graph itself, we know that today the private property, being the bottom line here, is growing very, very steadily, very, I would say, consistently. Now, the one that is leading the price point will always be the new launches right on top over here, being the blue line. So the blue line, or rather the new launch itself, caused the price to go up because they pull up the entire market together. However, if I want to determine whether or not buying a new launch makes sense, okay, we still have to look into whether or not the subsale market is doing well. Because the subsale market is the time whereby they are able to sell within that 1 year from TOP to CSC. Of course, in the resale market, as long as the subsale market makes money, the resale market in that particular development will do well as well. So when we look into this chart and we understand that today, anything that you are selling within this region over here, this is your current sale based on your subsale market right now. But when did they buy this property? And if you look at it, they bought this property 4 to 5 years ago. So they are selling in 2025. They bought this property within this region over here. So this means that today, even though they buy at this region from here all the way to here, they will have made a good maybe $200 to $300 or even $400 to $500 per square foot gains already, considering that they are buying new launch, selling at subsale. So when we see this, right, what do we want to get out of this is that today, yes, no matter how when we buy into new launches, the subsale market will still move when the time comes for the TOP to actually sell to the resale owners or to second-hand buyers. The prices will move. The resale home owners who are selling within that region will also see a slight increase, even though it's not as significant as the ones who bought the new launches, but the price growth is steady. All right. So when we identify this itself, right, and we can come in to find that window of opportunity for a post-launch, that today you are buying directly from the developer, buying back into a 2 to 3 years ago price tag. This is the kind of development that we want to spot, which we will talk about it in our next video. So if you like my content so far, please follow, subscribe, and share. And if you have any real estate needs that you need some consulting to be done, please contact me at 9199-9966. So in the next video, I'll share with you my top picks for 2026 and what to look out for in 2026. Thank you very much.